Hi everybody, this is Christian Griffin with Cornerstone Mortgage. I wanted to break down something that's a lot on clients' minds, whether they're currently in escrow or about to be in escrow. And that topic is cash to close. It's kind of a broad spectrum, but I'm going to break it down into layman's terms and hopefully simplify it so it's not something that stresses anybody out a week or 2 weeks before you get the keys to your house. Let's start with your down payment. Your down payment is the minimum cash to close that you'll need as a borrower. Now that that down payment is going to depend a lot on the loan program that you're in, or maybe the ability, or just simply the want or the needs that you have. For instance, common down payments are 3.5% down for FHA loans, 5% down minimum on a conventional loan, or 20% down or more on conventional loans or jumbo loans. That being said, that's a pretty basic dollar amount that you can figure out, that you know that's the minimum cash out of pocket that you'll need. In addition to your down payment, you're going to need your closing costs, which is a hot topic nowadays from multiple clients of mine. I'd like to discuss that and break that down into 3 different sections. Your closing costs are broken down into fees, prepaids, and your impounds or escrow account. Those names kind of get interchanged a little bit. Your fees are comprised of a bank fee, which is the fee that you'll be getting from your bank. My fee is $15.90. You've also got your appraisal fee, which can range anywhere between $400, let's say, to $600 approximately. These are rough numbers. That's a third-party fee. And then you've got escrow and title. Those fees will be determined once you actually go into contract and we request them from the individual parties themselves. So those fees, all compiled into $1 amount, could fall roughly in the range anywhere between $3,000 to $5,000 as just a rough ballpark number. So then you've got your next section of dollar amounts to add up into your closing costs, and those are called your prepaids. Prepaids are actually bills that you're paying in advance. Quite simply, it's going to be property taxes. From the time that you actually take ownership of your house, you'll be reimbursing the sellers for a chunk of property taxes they've already paid. So let's say you're in the second half of San Diego County property taxes, the sellers have already paid that. When you take ownership of the property, you'll be reimbursing them for the taxes that you'll currently be taking ownership of the house moving forward. You've also got prepaid daily interest. Since your mortgage bill will be due on the 1st of every month, then you'll actually be paying from the day in the month that you close escrow till the end of the month. So if you close on the 28th, then you'll be paying effectively 2 to 3 days worth of daily interest. And then you've also got 1 year in advance of your homeowner's insurance that you'll pay, which, depending on which carrier you choose, will total that dollar amount. That can range anywhere between, let's say, maybe $700 to $1,000 of upfront. So you're basically paying these bills in advance. So you've got your fees, which we talked about. We've got your prepaids, which we talked about. And finally, you've got an impound or escrow account. This is your money, basically. You're taking out of one hand and putting it in the other. So it's not a fee in my eyes. It's just basically your money being put into a so-called savings account. In some instances, this is mandatory. Effectively, if you put less than 10% down or you're in a government loan, then you have to come in and have an impound account. If you're putting more than 10% down, it's an option. I personally have an impound account simply out of convenience, not necessarily because I have to come in with extra cash, but it's one less bill that I have to worry about every year. That being said, your impound account does vary depending on the time of year that you close, because basically you're withholding or you're putting money into an escrow account, and you want to put enough in there so that when your property taxes are due and your homeowner's insurance is due, there's enough money in that account to make those payments in full. You don't effectively pay those yourself, but the bank actually cuts a check and sends it directly to the county or your insurance carrier. If you have any questions, feel free to give me a call. My phone number is 858-220-6424. This is Christian Griffin, Cornerstone Mortgage, and that is a rough, very brief explanation of cash to close, which includes your closing costs. Thank you very much.